Ladies and gentlemen, good day and welcome to the Vardhman Special Steels Limited Q4 and FY25 earnings conference call, hosted by Choice Equity Broking Private Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Deepika Murarkar from Choice Equity Broking Private Limited. Thank you, and over to you, ma'am.
Thank you. Good noon, everyone. So on behalf of Choice Equity Broking, welcome to the Q4 and FY25 post-earnings conference call of Vardhman Special Steel Limited. I also take this opportunity to welcome the senior management team. So on today's call, we have with us Mr. Sachit Jain, Vice Chairman and Managing Director, Mr. R.K. Raveri, Executive Director, Mr. Sanjeev Singla, CFO, and Ms. Soumya Jain, Executive Director. This conference call may contain certain forward-looking statements which are based on the beliefs, opinion, and expectations of the company as on the date of this call. These statements are not guarantee of future performance and involve certain risks and uncertainties which are difficult to predict. I now invite Mr. Sachit Jain from the management side for the opening remarks, to be followed by the question and answer session. Over to you, sir. Thank you.
Thank you so much, and good afternoon, everybody. In addition to the names mentioned, Sonam, our company secretary, is also on the line. Thank you so much for being here with us, and this has been a good year for us. We've had record production, record sales, and we have tested our rated capacity and our targeted capacity of 300,000 tons a year for 1 month, 25,000 tons of billet making. So we tested that. That was one big achievement that we've had. The second area I would say is that we were implementing our COX block. This is a sizing block which comes in the rolling mill. It's an attachment which gives us precise diameter control, and we can go into precise dia, including in decimal ranges also. So first decimal point. So that becomes a better value-added product for our customers. It's a standard product for good mills. It's not something exotic that we have discovered. So no R&D involved. It is, but for us, the important part was we could manage it with a very small shutdown. So we were told by the directors of COX, who have got 25, 30 years experience, that this was perhaps the fastest implementation anywhere in the world. The mill was shut down for 23 days, and we could start hot trials. So that was something very exciting, and we're looking forward to this. With this implementation of the COX block, 3 things would happen. As I said, 1, precise control would happen. Second, our capacity in rolling would increase, which means our over time our job work for outside rolling would come down. And 3, our working capital inventory would come down. So as you know, as of 31st March, we had a high working capital inventory, finished goods inventory primarily because of the shutdown. So it'll first come down to normal levels, then over the next 6-8 months, we hope to bring those down to the new targets. Apart from this, this is the first year we have given a dividend of 3 rupees. We were able to increase the dividend from 2 to 3. This is a 26% dividend payout, and our target is to maintain around 25% dividend payout. So we are at our target. And our company policy is always to maintain as far as possible or increase dividend while trying to be around 25% dividend payout, and we'll be targeting that. The other big thing is that we've been discussing that we intend to put up a new plant. We've been discussing this over various Concalls and various meetings with large investors who showed interest in the company. And finally, we've been discussing with IG for the last almost a year. And finally, the board has taken a decision in the meeting yesterday to put up the new plant. We have selected this plant to be put up in Punjab. We believe Punjab is a very strong location to put up an alloy steel plant. This will be green steel. It will have a solar plant right from the beginning, and our carbon footprint would be lower than the existing plant. The investment as of now is targeted to be about 2,000 crores. So in addition to more of the same, that is expansion, we'll be able to increase the diameter sizes towards the higher diameter products that we don't have. We'll be able to improve our quality from our current levels, and we'll be able to reduce costs from our current levels. In addition to this, the new plant will give us flexibility to later on add other products. No decisions taken on that, but products like wire rods, which are in short supply, high quality wire rods in short supply in India. A lot of them get on, especially for top quality fasteners. This is something which we are hearing from the auto OEs, that there's a shortage in this product. And then it also gives us flexibility in the future. Again, no plans just now to move into non-automotive steel products, which is something I've been talking in the past in my annual reports, in my letter to the shareholder in the year I think 2017 or 16 or 17. I've been talking about the desire to move to non-automotive steels. Of course, with Aichi's partnership, that thought was postponed. It was never dropped. So with the new plant, we will have the flexibility at some stage to move into those non-automotive steel plants also. Overall, our partners Aichi are also very excited about this project, and we'll be discussing with them to provide us the full technical know-how to put up this plant, and all those in the next few months we'll be discussing with them how to move forward in that area also. And the plant is going to be financed through a mix of equity and debt, and so there will be equity issuance in due course. And we have talked to banks, so at least 3 banks have expressed support to give us the loans for this project. So again, in due course, all that will be done. So the process of land purchase has begun, and hopefully in the next 2 to 3 months, we should be able to complete the land purchase. And once that is done, then we'll make the application for environmental approval and so on. That's all for my opening remarks. Mr. Singla, our CFO, will take you through some financials, and then we're open for Q&A.
Thank you, sir. On the financial performance for the full financial year FY25, our total sales volume is 215,000 tons, which is higher by close to 11% over the previous year. And in terms of value, it is higher by only 6.2%. So the difference is because of the price reductions happened during the year. So first decrease was happening from 1st of July and then from 1st of October. So with these price reductions, our total revenue in terms of rupees has increased by 6.2%. As a result, our EBITDA, including other income, is 177 crores, as against 172 crores in the previous year. EBITDA per ton, we have achieved 8,200 rupees per ton, well within the stated range of 7 to 10,000 rupees for the year. And as a result, our PAT stands at 93.09 crores, marginally higher than over the previous year. So the dividend, Jansar has already discussed. Solar power plant is the one item which we are expecting to be commissioned in the current year from 1st of July. The plant will be commissioned, and accordingly our 40 to 45%.
Please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Muskan Rastogi from B&K Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. My question is,
Yes.
to reach rolling mill capacity of 250,000 to 260,000 tons, what is the left out capex? And from September, once we reach a full 250 to 260k tons capacity, what is the capex plan for rolling mill capacity for next 2 years? And additionally, what is our capex plan for 2 years for this 20 billion investment? And will the capacity commissioning will come in phases or all at once at FY30?
Okay. So as far as this plant is concerned, largely the capex is done except for the reheating furnace, which is one piece of equipment, which will come up by October and get commissioned by December. Yes. And maybe 2-3 months of stabilization. And then after that, the rolling mill capex is complete. So no more capex in the rolling mill. The other capex which is pending is for a non-destructive. I'm sorry?
So how much capex we've done to reach this 250? Like you said, largely it is done. So how much is it?
That amount already been announced, but again,
last year we have done the total capex of 127 crores, and as Jansar has explained, reheating furnace will be done in the current year. So another 50 to 60 crores and then NDT line.
So left out capex. I'm sorry, the left out capex.
Left out capex in the next 2 years, including this FY26 and FY27, will be close to 175 crores.
Okay.
So out of that, about 55-60 crores for the rolling mill, remaining part, and the other part for the entity line, environment expenses, and other expenditure.
Okay. So
after that, this plant is almost complete. So no major capex in this plant, and then replacement capex at the right time will again. That's normally going on. As far as the new plant is concerned, in the next 2 years, the major capex is only going to be land. So, and then advances of machinery and all will start sometime in the financial year 26-27. So, no major capex apart from the land, which is going to happen this year.
Okay, sir. So with the limited capex requirement in the existing line, can we become net debt free by FY26?
Our target is, if you don't take the capex for the new project, then we will be net debt free in the next 3 years. Yes. Next 3 years will be net zero debt. So we will have roughly 1,000 crore net worth company with zero debt to finance the new project of 2,000 crores.
Okay. And so, like, I'm new to this industry. Could you help me? How will Cox Block help in reducing the inventory and increasing the quality? And what is the total investment in Cox Block, and what is the payback return that we are expecting?
We don't separate out each individual expenditure, but it's a significant expenditure. That is one. And the quality improvement happens with precise diameter control. So diameter control is very precise. So for the really high quality, when you get into import substitution of steels which are still getting imported from Japan, so those kind of steels, to replace them, you need very precise diameter control. So the Cox Block will help us to do that. So that is one. Two, the changeover times become much lesser. So the time lost and therefore capacity lost in changeover goes down, and which enables our rolling mill capacity to go up. So that is the second advantage. And inventory comes down because the changeover is faster. So you don't need to stock as much finished goods as we have today. So the inventory will come down. Inventory, you need to stock inventory because a changeover costs a lot of time. and therefore when customers in the auto space require just-in-time delivery, and therefore you need to maintain finished good stocks for our service purpose. We are not a commodity steel player.
Okay. So how much this capacity will go up with this change?
About 10,000-15,000 tons per year.
Okay, sir. And sir, another question. Many of our peers are unlisted.
Wait in the line. Can you come back again in the line? Because there are
Sure.
Thank you. The next question is from the line of Jitendra Khatri from Tata Mutual Fund. Please go ahead.
Yeah. Thank you, sir. So my question is, what would be the EBITDA per ton once your entire new capacity comes online and it ramps up and all? So what would be the peak EBITDA per ton targeted by you?
See, from next year, that is 26-27, we'll be raising our target upwards to 8 to 11,000 in this plant. New plant, the production will start somewhere in 28-29, so very difficult to predict it now. So when it reaches full capacity, it should again be around the same figures as this.
Okay.
And maybe a bit higher, but very difficult to predict that far ahead.
Yeah. And secondly, sir, from your community,
keep in mind that the fixed costs, all management costs, marketing costs, some of the top management, all those costs will be spread over a much bigger volume.
Yeah.
So the top management will not change. We will not be adding in top management. So all those costs will be spread over a much bigger volume, and therefore those costs will come down.
Sure, sir. So my second question is, in your talks with Toyota and Aichi Steel, so what is the communication you're getting from them on the tariff preparation? So are there any change in plans or something on that line?
No change in plans.
Okay. Thank you so much.
Thank you.
I mean, this project has been announced after knowing fully well the tariffs are in place.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your question to 2 per participant. If you have a follow-up question, I would request you to rejoin the queue. The next question is from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, sir. Can you hear me?
Yes, sir.
Yes, loud and clear. Please go ahead.
So, you said the solar power plant will commence by this year, and it will cater to the 40 to 45% of the power demand. So, how much will this have, impact on the EBITDA? Like, how much per quarter will the incremental EBITDA be?
We are not sharing those figures of specific changes of costs and those things. So, but one of the reasons that we are confident of our range going up is because of cost-saving initiatives like this.
Okay. And so I just wanted to understand why did the EBITDA margins during Q4 had a 370 bips impact?
We don't see quarter to quarter is very difficult to explain, but one of the main reasons is we had a shutdown of the plant and therefore the plant production was very low. So that leads to, and lot of job work outsourcing also happened. So all kinds of things happen. We don't discuss quarter to quarter. We look at annual EBITDA figures, and also depends on when raw material prices go up and the price changes happen later. So quarter to quarter situation will keep fluctuating.
No, I meant year-on-year EBITDA margin itself has decreased. Like last year it was 11%, this year it was 7%.
Year on year, the EBITDA is within our range of 7,000 to 10,000 rupees EBITDA per ton.
Okay.
The full year. Please don't look at any one quarter, and especially a quarter we've had a major shutdown. There you will get distorted results.
Okay. So now the plant has the shutdown plant has it has been like working, or is it still shut down?
plant has started, but not running at full capacity because each size has to be tested. Please understand, we are making automotive steels, and therefore each size has to be made, tested, and then given a clearance to go ahead. So full-scale production has not started, but production has started. That's the main thing. And the shutdown time was less, and all this has been taken into account in our sales forecast and inventory planning for the shutdown.
Okay. Sir, I just have one doubt.
The adjustment of quality and stabilization is so far seems to indicate it is taking much less time than we had anticipated and we were prepared for.
Okay, sir. Sir, I just have one doubt with respect to the capex which you said earlier. So what was the capex? Like you said, 175 capex for FY26 and 27. And what was the breakdown?
It is largely for, as we said, the reheating furnace, the non-destructive testing line, some R&D equipment, some straightening machines here and there, some environmental expenditure, combination of everything.
Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Ritvik Sheth from One Up Finance. Please go ahead.
Hi. Good afternoon, sir, and sir, congratulations.
Sorry to interrupt, sir. I would request you to please use your handset.
Yeah. Is this better?
Yes, sir.
Yeah.
Yes, much.
Hi. Good afternoon, sir, and congratulations on the announcement of the greenfield plant. Sir, couple of questions on the greenfield plant itself. So earlier in the previous calls, you had mentioned that the capex could be anywhere between 1,500 to 1,700 crores, and you've announced a capex of about 2,000 crores. So any specific reason that it is significantly higher than we anticipated, or are we adding something?
See, those things keep changing as some of the machinery configurations that we were. Initially, it was just an idea. And now, as our ideas are getting more refined and some of the equipment that we need to add in the plant, those are being looked at.
Okay.
Just to give an idea, this COX block was something that we had not planned initially, that we said we'll postpone it, put it at a later stage. And now we're going to put it up in the new line also immediately. So, stuff like that keeps getting added. As we get deeper into negotiations and start and so on, we'll get more precise ideas of the cost.
Okay. So this is like a ceiling of the capex. It could be lower also, right?
It could be lower, it could be higher as you go around. This is an idea that we have as of now.
Got it. And so earlier, a couple of years ago, we had targeted for 25% EBITDA to capital employed for the existing plant. So we are reaching towards that direction. So does this hold true for the greenfield plant as well, which you are going to set up?
We will not at that stage be talking of separate plant wise because products will be allocated to plants separately. But company as a whole, yes, when the new plant works at full capacity, we would like to target the same 25% EBITDA on capital employed.
Okay. And so one last question. What is the amount that we will be spending on land? Total amount?
We don't again give out all those specifics.
Sure. Okay.
It'll come out later at the right time.
Sure. And any timeline?
I said next 2-3 months we want to complete the land purchase. See, funding is, as I said, equity. We have said in the past also our partners at some stage will increase their stake. Now, when do they increase their stake? That is up to them. So in the next 3 years, at some stage, they will increase their stake. And so that will be one source of funding. And at some stage, if they invest, the promoter might also like to pitch in a bit. And then if there's a gap, we might do a QIP. So all those options are open to us.
Sure. And sir, any incentives we will receive from the state government?
Yes, we will receive incentives.
Okay. So would it be possible to highlight that on 2,000 crores, what could be the incentives
No,
that?
you can look it up in the industrial policy of Punjab. It's there. It's all public information.
Sure. Okay, sir. So thank you and all the best, sir.
Yeah.
Thank you.
Thank you so much.
The next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Namaskar, sir, and thank you for this opportunity. Firstly, in continuation to what the previous gentleman was asking, sir, in terms of the government incentives sir, जो हमें GST और electricity पर अभी प्राप्त हो रहे हैं, they are coming to the sunset, are they comparable to that और capital subsidy भी है सर इस नए प्रोजेक्ट के लिए?
आप जो देखो जो पब्लिक इन्फॉर्मेशन है, प्लीज डोंट आस्क दोस क्वेश्चन ऑन अ कंपनी कॉल ना. ये पब्लिक इन्फॉर्मेशन है, आप देख लीजिए जो गवर्नमेंट पॉलिसी इंसेंटिव्स है.
जी सर, जैसे आपने कहा कि टनेज हमारा इम्प्रूव होगा एंड आई थिंक सो मंथली 25,000 इज द रेट विच वी हैव हिट फॉर द मंथ ऑफ मार्च. सो फॉर द करेंट फाइनेंशियल ईयर 25-26
नहीं, दिसंबर में हमने किया है 1 महीने के लिए, बस टेस्ट किया है. तो अभी प्लान नहीं है इस साल वो कैपेसिटी अचीव करने का. ये कैपेसिटी अचीव करने का प्लान हमारा 26-27 में लेटर स्टेज पे होगा, बट 27-28 में we for sure we like to achieve that kind of production.
Okay. Just to confirm, sir, so what should be the tonnage we should work? Sir, come again.
अगले साल के लिए हमारा आइडिया होगा, इस साल 2,15,000 टन है तो 2,25,000 टन के आसपास अगले साल, और उसके अगले साल हम 2.5 लाख के आसपास करने का प्लान करेंगे.
So when we look at the presentation, hello.
Again, can you come back to दूसरे को चांस देके आप वापस आ जाए? Because
हाँ सर, मैं दोबारा क्यों में आता हूँ.
Thank you.
हाँ जी, please.
The next question is from the line of Angad Katade from Samiksha Capital. Please go ahead.
Thank you for the opportunity, sir. Sir, two small questions. Any plans for plant shutdown in FY26?
This plant, yes, there will be some more shutdown because जब reheating furnace लगेगी, then we will have a small shutdown, but no major shutdowns now.
Okay. And sir, you mentioned during the call that the new plant will start contributing from FY28-29 onwards. So just want to ask, will the new plant capacity will start in multiple phases or is it on one go?
No, it will be one shot commissioning. So there are two parts to it, melting and rolling. Very difficult to synchronize which they'll come up exactly the same time. So one may come up a little earlier than the other, that's all. But it's just an implementation part. As far as plan is concerned, it'll be one furnace, one rolling mill, one data refining furnace, one vacuum decasting, and one caster. So it's all one single line. So it's not going to come up in phases. It'll come up one shot.
Got it, sir. So thank you. I'll get back.
Capacity utilization will come up in phases. Capacity utilization will come up in phases.
Thank you. The next question is from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello. Hello.
Yes, we can hear you.
Yes.
Yeah, so previously you guided for an EBITDA range of 8,000 to 11,000 was that for FY26 or FY27?
We will target it this year also, but as we said, that still we are not running at full capacity of our rolling mill because our reheating furnace got delayed. So we will target this year itself, but next year we are fairly confident of this range.
And the realizations, do you see them anytime going up this year, or will they stay stable at this rate, or they might even go down?
I don't indulge in forecasts on pricing. That's something which is not in our control. But overall, in the current circumstances, I don't see the probability of prices going down from the current level. So, if at all, at some stage, prices may start going up. We've asked the OEs for a price increase. So let's see how things shape up.
Okay. Thank you.
All depends on Tata Steel, one company. They decide the pricing. So if you all put pressure on Tata Steel, then when their margins start getting affected, they'll want to increase prices and then change the sentiment in the market.
Okay. Thank you.
Thank you.
Maybe with the safeguard duty which has come in, so that may start at least the downward pressure which was there, the negative sentiment would most probably be corrected.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next follow-up question is from the line of Muskan Rastogi from B&K Securities. Please go ahead.
So thank you for the opportunity again. So I wanted to ask, many of our competitors are unlisted. So getting data becomes difficult. Since you're interacting with the marketing team, I want to understand the demand and supply scenario. Also, could you please talk about the dynamics and reason for the pricing pressure, and will it continue or not?
One, demand is okay in the car segment. It is okay in the two-wheeler segment. The problem seems to be in the commercial vehicle segment, and the growth is not happening to the extent people had forecasted. And
So other industry side?
I'm sorry, we are primarily in the car and two-wheeler segment, so we are fine. And the other issue is exports of components, which is another area where our steel goes. And in the current tariff situation, there is some turmoil in the next few months. So we'll see how that shapes up. Some customers may cut down their purchasing. My belief is that overall this tariff situation is going to eventually be beneficial for India. So if we leave aside the turmoil of the next 3 to 6 months, things should be better for India as a whole. So, but overall, when I talk to people, nobody is too concerned about the demand.
Okay.
And the other issue is the pricing pressure. As the big boys, see, we are smaller players. The big boys, primarily Tata Steel and JSW, they come under pressure because of Chinese imports on the big steel players, so in the commodity steels. So eventually when customers and OE is talking of HRC and CRC, there's a pricing pressure because of imports. So somewhere along the line, they also feel if we ask for a price increase for our product, when the other product is coming for a price reduction, somewhere psychological not to allow a price increase or push for a price reduction. I think that pressure is over, but very difficult to make those kind of forecasts.
So I wanted to ask,
So
what is the in alloys?
Our focus is on our internal cost improvement and efficiency improvement. That market conditions being what they are, we will try to keep improving our internal factors. And in the current market situation, we expect to be able to match this our range 7 to 10 for this year, and 8 to 11 is the new range we like to offer from next year. In the current market situation, if market situation improves further, then we will be at the higher end of this range.
Okay. So I wanted to understand the dynamics, demand and supply scenario in alloy steel.
Yeah, I'm talking about our product segment. Yeah, so we are currently, demand is reasonable, which is why we are talking about increase in sales next year.
All right. Okay.
We've had record sales this year.
Mm-hmm. So last year exports were 5%. How much was it for FY25? And how much volumes did they report from IC for FY25?
We are not declaring specifically for what they are buying, but they are buying less than what we had estimated. Toyota sales in Thailand have come down a bit. So their own sales have come down, and therefore their requirements have not been commensurate to what we were expecting. And we are working on alternate plans to see where what they had said could be made up. We are working on alternate.
How much was exports in this year?
5%.
5% only. Okay. And sir, last question. What is the market share? And you mentioned that with IC tires, we can get more business overseas and opportunities overseas. So for exports, how much mix are we expecting from IC?
We don't take out any such numbers. We'll see how things shape up. And I was surprised to learn from my export team that we are by far the largest exporter from India. Even at 5%, we are by far the largest exporter of alloy steel automotive steel bars from India.
Okay. Okay.
In Thailand, which is the biggest market in Southeast Asia.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next follow-up question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yeah. Dhanyawad, sir, for the opportunity again. So when we look at your investor presentation, yes, sir. In the investor presentation, sir, we find 2 slides wherein we are mentioning wide range of rolled and bright bar product and diverse application of our products. So can you make, sir, I'm sorry for this question, but I cannot, what do we make of this diverse application of our products? These goes to the OEMs or these are the final products for which the bars are used?
नहीं, ultimately it goes to the OEs. हमारे जो सारा बिजनेस है वो ऑटोमोटिव बिजनेस है. तो या वो कार में जाएगा या टू व्हीलर में जाएगा या ट्रक में जाएगा या ट्रैक्टर में जाएगा. 97% बिजनेस हमारा वो है. 3% कहीं ना कहीं बेयरिंग इंडस्ट्री में चले जाते हैं जो रिप्लेसमेंट मार्केट का है, जो हमारा टारगेट सेगमेंट नहीं है. ओके. और डाइवर्स हुआ बिकॉज ये डाइवर्सिटी हो गई कार्स, टू व्हीलर्स, ट्रक्स एंड ट्रैक्टर्स. देन डाइवर्स हो गया वेरियस काइंड ऑफ पार्ट्स. रेयर एक्सेल शाफ्ट है, एक्सेल्स है, गेयर्स है, पिस्टन पिन्स है, कनेक्टिंग रॉड्स हैं. सो अलग अलग पार्ट्स ऑफ व्हीकल्स में हमारा स्टील जाता है. 400 से ऊपर ग्रेड्स हम बनाते हैं.
So that means हमारा जो एंड प्रोडक्ट है, हेलो
या
सर, हमारा our end product is the bars only, and then this axle gears and all these have been done by the other manufacturer and then goes to the OEM. This is how the supply chain is. Right?
Yes. So we would be tier 2s in most cases and sometimes tier 3s.
Okay. So the casting players and all are also buying from us and then creating that axle shaft for buses and all. That is what the...
No. Our customer segment is a forging industry. So our products are all forging steels. Largely in forging steel. So our products will be taken by a customer who will forge the product. Then there will be some machining which will go into an assembly, which will go into the automotive company. Some parts will go for direct machining, but that's a smaller part of our business. But there is a proportion which will go straight for machining without any forging. But largely our product goes for forging industry.
Okay. And just to conclude, sir, when we see players like GNA Axles or Auto Axles, are they in the second, third tier to result into the end product, or they do not fall in our value chain part? Companies like Auto Axle and GNA Axles?
GNA Axle is a large customer of ours, and they would supply to a tier 1 like Meritor, and that Meritor would be supplying to the OE company. So GNA Axle for our product largely would be a tier 2 and we'll be a tier 3. And in some cases, some of our products, they may be supplying directly to the tractor manufacturers, in which case they'll be a tier 1 and we'll be a tier 2.
Correct, sir. Thank you, sir. I joined the queue, sir.
Thank you. Participants who wish to ask a question may press star and 1 now. The next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yes, sir. Just to press upon the point, that when we speak of 2028, 29, and we running short of capacity, so can you just translate for us what gives us this visibility of 3 to 4 years down the line? Is it the historical part, or are we seeing the end customers also planning similarly in terms of the, जैसे सर आपने जो value chain बताई है, other players are also in the same situation? That is what has given us the fillip to come up with this greenfield facility?
So there is visibility because we deal with the OEs directly also. We know the developments that are going on with the OEs. For example, we are working on import substitution of steels which are coming into some of the OEs where we have got approved. And we know that after 1 year of testing and so on, those businesses will result in actual business coming in. And initially it will be gradual, and then over next 2-3 years will pick up more volume. So we have an idea of how much business will come in. Similarly, we've talked about the European OE coming into India. They're coming in again in May. I met them in Europe in March. So they are very gung-ho on sourcing forging parts from India. So again, those are developments that are going on. So we have full track of developments which are going on with specific OEs. So that gives us some confidence. Second, there is natural growth in the auto market. So the CAGR over the last several years has been 6 to 7% in the auto market. So that kind of growth will keep coming in. And then in addition, there are tailwinds like green steel and circular economy. As the government of India and the world is pushing to reduce the carbon footprint, Government of India has come out with a definition of green steel is below 2.2 carbon footprint. We are today at 0.72, and after our solar plant will come down to about 0.45 or 0.48. So we will be amongst the lowest carbon footprint steel companies in the country. And that gives us, once the government starts putting in these norms, we will get an advantage. And as the global OEs, some of them are putting in pressure on reducing carbon footprint, then there will be better sourcing for us. So we believe just now people are talking. In the next 2-3 years, it will start translating into business, which will lead to a bigger shortage than what we are forecasting today. And we feel that by the time a new plant comes up, it will fill up maybe much faster than any of our forecasts that we have done for getting approval of the board. So we are not taking any of these trends in our forecasts, but these trends are very clearly visible. And as we talk to customers, they are talking about it very seriously. One of the reasons this European OE is coming to us is only because of green steel. And one more OE has already approved us, European OE. So one has approved us, one is in the process of approving us. And gradually more such companies will come in. We are today perhaps the leading company in this area, or amongst the leading for sure. But in the automotive space with our customers, we would be far ahead of most of our competitors in this area of green steel. And the second area of circular economy, which means scrap coming in from the auto company, coming to a steel company, going to a component maker, and going back to the auto company. We are far ahead of our competitors in this space also. So this all is serious talks going on, and the moment it happens, translates into reality, we will be facing much larger orders than what we are currently doing. But all this is currently talks. These talks will materialize at some stage. That some stage could happen next year. It could happen 2 years down the line, 3 years down the line. As of now, we have no way of predicting that. Apart from the fact that the seriousness with which people are talking on this topic is very high. So you have to draw your own conclusions.
Sorry to interrupt, sir. I would request you to rejoin the queue for your follow-up question. Thank you. The next question is from the line of Kirtan Mehta from Baroda BNP Paribas Mutual Fund. Please go ahead.
Thank you, sir, for giving the opportunity. When we are planning to sort of raise our production targets from 250 KT to 250 KT, what are the new products or applications that we are targeting? Would you be able to give some color that what can be introduced over the next 2-3 years, and who could be the target customers for the same?
So there are no new products. This is the same product. There will be some changes in chemistry to meet the requirements of a particular customer. One change is in a nickel moly product, a little chemistry, a little nickel going up, a little moly going down, or some other grade, vanadium, another alloy getting added. Those are all minor variations. So I would say no new product which is on the horizon in this plant. And the new plant, we will be able to serve bigger diameter of steel than what currently we're able to supply. So that will be a product extension, not really a new product. Wire rods, if we get into in the new plant, that will be a new product for us. And the moment we get into non-automotive steel, that will be new technology and new product, both.
Thank you, sir. And in terms of the customer segments or customers specifically, where we see the scope for expansion?
The customers are the same. The car companies are Maruti, Tata, Hyundai, Toyota. So car companies are all the same. The two-wheeler companies are all the same. There's no new customer coming in. It'll be It'll be participating in their growth as they grow their volumes, and maybe getting some import substitution, because the government of India is very clear that steel, if it is produced in India, should be brought from India. And the OEs are working very hard with steel companies like us to see if those steels can be replaced and be produced from India. And we are at advanced stages for some of these products.
Sure, sir. Thank you.
Thank you. The next question is from the line of Muskan Rastogi from B&K Securities. Please go ahead.
Hi, sir. Thank you for the opportunity again. So what this export mix, which is currently at 5%, we mentioned in the PPT that it will reach 27% in next 2 years. So is it possible for us to reach?
With the current trend, unlikely to happen, and thank you for pointing it out to us. We will correct the presentation. Thank you for pointing it out.
So it will, there would be minor increase in the export mix, or is it going to increase?
Any forecast on exports. We are not making any forecast on exports, because the other companies, even the European OEs that are coming, we originally thought they'll be taking steel from us, so they are now looking at getting forging sources in India. So the destination would be Europe, but the sales would be domestic from us.
Okay. And the volume guidance for next year, sir?
We are hoping to do 225,000, so marginal increase, because the capex increase is still limited by our rolling mill. The impact of the capacity increase will happen only last quarter, but that will also be taken up in stabilization. So next year, it is 26-27, we will be targeting 250,000 tons. Okay. So a bigger jump coming in 26-27.
Okay, sir. So any, in FY23, you mentioned that we see good traction from Maruti Suzuki and Toyota post the Aichi tie-up. So any inquiries coming through, are we getting orders from them?
Yes. See, those things are happening.
Okay.
The import substitution I talked about will be happening from these foreign companies only. So those are the products which are being developed. They've got into the queue, and hopefully from next year we should start seeing orders coming in on some of those products.
Okay, sir. And so in this high dia currently, what is the size range that we can go?
Currently, we can maximum go up to 90 mm dia. In the new plant, we expect to go up to maybe 130 mm.
Okay. And so one last question. Due to capacity constraints so we are outsourcing. So when will this stop so that we can see benefit in EBITDA per kg?
26-27, the outsourcing will stop. Largely
Yes,
stop.
okay.
There is still some product which is 240 by 260, which is a heavier billet that we have, which we can't use in our rolling mill, so it has to be rolled outside. So that part will continue, but that's a much smaller part. How much volume? 5,900. So about 5,000 tons annually. So it will be a small part. That's the only part will be outsourced. And little bit in our bright bar, sometimes in our peeling lines for servicing reasons, we have to do a little bit of outsourcing. But the largest chunk of the outsourcing will be over in 26-27.
All right, sure. Thank you so much.
Thank you.
This year itself, you will see a drop in the job work.
Thank you. The next question is from the line of Ramakrishna Neti from Zen Wealth Management Services Limited. Please go ahead.
Hi. Thank you for the opportunity. Just at a industry level, one question, sir. With respect to the requirement of alloy steel within India, so what is the total domestic capacity and what are the imports that is? Any breakup available?
I don't have those specific information. If you mail us, we can send that. But roughly the market size today is about 4 million tons. And we expect in the next 10 years, this market size to reach about 10 million tons. Imports is not too big an area, but in our product segment, even if 50,000 tons is getting imported, that's a very big segment for us to target.
Got it. I'll drop an email. Thank you.
And most of the steels which are getting imported are high quality and where we are well positioned to take advantage of that, which is where again our partnership with Aichi comes in strong.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Sajid Jain for closing comments.
So, ladies and gentlemen, thank you so much for being here. And the most exciting part for us is clearly this new project. Though the results of that will start showing up much later than the horizon most people have. So as of now, our target is 29-30 is the year we start production. But basically it conveys a signal that we are optimistic about this market and we are optimistic about our partnership with Aichi and becoming stronger over time. This year we'll complete our second 3-year agreement. So it's a very important period for us. And we are going ahead with full commitment for strengthening this business. Thank you so much for being with us today.
Thank you. On behalf of Choice Equity Broking Private Limited, that concludes this conference. Thank you for joining us and you may now disconnect your line.